Welcome to Business with Louis, the show where we explore the world of commerce and entrepreneurship to help you succeed in today's fast-paced business environment. I'm your host, Louis, and today we're going to dive into a critical topic that affects us all: tariffs and trade wars, impact on consumer prices. To start, let's define what tariffs and trade wars are. Simply put, a tariff is a tax imposed by one country on goods or services imported from another country. Trade wars occur when countries engage in a series of retaliatory measures, such as imposing tariffs, to restrict trade and protect their domestic industry. The impact of these actions can be far-reaching, affecting not just the businesses involved, but also consumer prices. Understanding tariffs and trade wars is crucial for businesses and entrepreneurs because they can significantly influence global supply chains, market access, and ultimately consumer spending habits. Historically, trade policies have been used as tools for economic development, national security, and diplomatic leverage. However, in recent years, we've seen a rise in protectionist policies that have led to increased tensions between major trading nations. One of the foundational concepts is comparative advantage, which suggests that countries should specialize in producing goods for which they have a lower opportunity cost. This theory, developed by David Ricardo, underpins the idea of free trade, where countries benefit from exchanging goods and services without barriers. However, when countries impose tariffs or engage in trade wars, it disrupts this delicate balance. The effects can be seen in various economic models, such as the gravity model of trade, which predicts that trade between two countries will decrease as tariffs increase. Influential thinkers like Adam Smith and John Maynard Keynes have also weighed in on international trade, emphasizing its role in economic growth and stability. To illustrate how tariffs and trade wars play out in real life, let's consider some notable examples. The ongoing trade tensions between the United States and China are a prime case study. When the U.S. imposed significant tariffs on Chinese goods, China retaliated with its own set of tariffs, affecting American exports such as soybeans and aircraft. This tit-for-tat approach has had far-reaching consequences, including increased costs for consumers, disruptions to global supply chains, and impacts on economic growth. Another example is the Brexit saga, where the United Kingdom's decision to leave the European Union has created uncertainty around trade policies and tariffs. This has led to concerns about the future of UK-EU trade relations, with potential implications for businesses operating in both regions. So, what can businesses and entrepreneurs do to navigate these complex issues? First, it's essential to stay informed about global trade developments and their potential impact on your industry. Monitoring news from government agencies, trade associations, and market research firms can help you anticipate changes in the trade landscape. Second, diversifying your supply chain can mitigate risks associated with tariffs and trade disruptions. This might involve identifying alternative suppliers or negotiating long-term contracts with existing partners to secure stable pricing and availability of critical components. Third, developing contingency plans for potential tariffs or trade disruptions is crucial. This could include strategies such as hedging against currency fluctuations, investing in research and development to improve product competitiveness, or exploring new markets that are less affected by trade tension. Finally, it's worth noting that while tariffs and trade wars present challenges, they also create opportunities for businesses that can adapt quickly to changing trade conditions. Companies that invest in innovation and R&D may be able to develop new products or services that are less dependent on imported materials, thereby gaining a competitive edge over their rivals. In conclusion, tariffs and trade wars have significant impacts on consumer prices, economic growth, and global trade. By understanding the underlying principles and theories, businesses can better navigate these complex issues and make informed decisions about their operation. Remember, every great business starts with action, so don't be afraid to take the leap and explore new opportunities. As we wrap up today's episode, I want to leave you with a few key takeaways. First, tariffs and trade wars can have significant impacts on consumer prices and economic growth. Second, businesses should diversify their supply chains, stay informed about global trade developments, and develop contingency plans for potential trade disruptions. Finally, companies that can adapt quickly to changing trade conditions may be able to gain a competitive edge over their rivals. Join us next time as we explore more business topics and insights to help you succeed in the ever-changing world of commerce. Be sure to like, share, and subscribe, and remember, every great business starts with action. Make your next move count.